Hi, Bo here from High Tech Investment, and in this video we're going to take a closer look at the settings for the Profit Retriever. Now we have gone over these in the past. You will find plenty of videos out there also how to optimize, but in this particular video we're going to show you how we optimize, how we get to the individual set files that we have, and also the amount of work that actually goes into them behind the scenes once they are up and running, and then when they have to be maintained on top of that. And the reason for this particular video here also is that we saw a recent video from Alex. Obviously Alex is doing something similar to what we do. Everybody starts off with the back testing of the MT4 or MT5 platform itself for each individual robot. But again, once that is up and running, you start to do the forward testing. And especially on the forward testing, we can see that there's a range of difference in between what Alex from Expert4X does and what we do. And obviously we also come from two different backgrounds. Now we know that Alex has tons of trading experience, more than 20 years, if people have been watching his videos here before. We don't have that luxury of having that much experience. We've been trading different types of trading, everything from gold, metal, crypto, and Forex currency here for the past 4 or 5 years, and very much into Expert4X robots, which seems to be delivering on a very steady basis, and that is why we stick with him at the moment. Now we're going to go into a bit more detail on it, because the background that I have is actually engineering. And since my original education long time ago here was AME, also called Aircraft Maintenance Engineer, then it all comes down to different types of manuals. You have to follow a certain procedure. You're not skipping anything. You're not deciding what you want to do in the meantime, and you basically just follow every single thing in the manual from A to Z. Now, we all know that trading is not like this, and trading shifts and changes all the time, but still some of the things that I have learned in the past and still feel comfortable with is to see the different numbers on paper before I actually start trading it. And those are some of the things we're going to have a look at in the video itself, where we are different, me and Alex here. So where he has a better feel, obviously, for when the robots are trading here, he will go in and basically on the fly make some small minute changes to the robot that he feels is the better ones. We have a different approach onto this, which is a bit more on the technical side, and it's definitely also labor intensive, and that's what we're going to show you here today. So in order also to make sure that you are not falling asleep, we are cutting it exactly to what you need to see. And we're not going to go through the entire optimization processes, things like this, but we are going to exactly show you how it works, how we actually uses the data, and then we try and compare it to not only one currency pair, but we're going to show you a few to see what we believe sometimes can be stable settings and what can be unstable settings. So let's get started and let's have a closer look at some of all these optimizations. Now, the way we prefer to just optimize the Profit Retriever robot here is start off with the very simple things. So basically the basic part on the robot itself, and we highlighted that in yellow here. And basically this is a bit of a template for all the Profit Retrievers on the Forex side. You start off here, and then you build on your experience and also the results that are coming back to you here. So the first one is basically the MA, so the period itself. We normally run somewhere between 2 and 12, so very conservative settings, and in this particular case we just had set this at 7. The next part we are looking at is the gap size, and that basically again intervenes together with the lot size down here. So we are running these 3 indicators together. Now there's 3 more down here, but what we actually have found is that it is a lot easier to see the system, to see where the robot is strong and where it's weak, if we test these 3 indicators together first, and then we move on to the next sections. Other people like to run all 6 in one go, and obviously that takes a really long time. If we do this, the first 3, we can only get this done. Obviously, we are running on the most detailed chart that we can, and depending on the currency, it could take 1 to 3 days. It depends on exactly how much time also you want to test back, and normally we do somewhere between 6 to 9 months. All depends on, again, on what exactly has happened in the market. There are some things that we would like to have in on the testing, and other times there's things that we prefer to have outside. And all these things can be a major event that only happens every 2, 4 or 6 years, similar to when we had COVID back in March 2020. It can also be that we don't really want to have the quiet periods of time, which could have been, for example, Christmas year 2022, where we had 2, 3 or even 4 weeks of very slow trading, and that obviously also changes things, especially for profit retriever when there's not much volatility. Then it could give you a wrong signal. So basically it's a bit more trade to save, and that means also that the price gap size could be indicated as lower. Now we want to find some reasonable and fairly standard settings that can be used all year round, and that's what we are trying to find, exactly the time of date that will suit that best. So that takes a bit of time and also a bit of testing, but over time and with the testing here, you will come up with a reasonable period of time to test everything. We don't do it from 1st of January until end of December. Ours is variable all the time, depending on how the market develops and how it looks. Now, when those 3 are done, basically we move on, and we then do further testing, and we do that then by changing the rate itself, so how fast the profit retriever lot size will go down, and in this particular case it's 85%. And then also that works very well together with the target lot, so basically means the lower part of where we should be, and that again changes the risk involved. And then the close amount at the end of the day here also, and normally we run somewhere between $2 to $30, and this particular case it's 26, because we know that this particular currency that we tested here, we can narrow the gap because it's always on the low side. So those are the standard settings that we always start off with, and then from there on you can build on it. Now, if you use these 6 particular settings, that means that you are going from a lot size, in this particular case of 0.22, and then it's being reduced, so 85% or actually 15% every single time. So next time it goes down to about 0.2 until it ends up all the way down here at the target lot at 0.04. Now, there's an opportunity also with the profit retriever to start going back up again. And there's also plenty of opportunities here with price gap scaling. All these are very, very specifics, but we prefer not to start off with any of these things, because again, it is like looking for last week lotto numbers, and we are not really interested in those because they have gone. We're not going to make any money on that. So it's all about trying to get the basics right first. And the basics, as we consider it, is these particular 6 items. So these six boxes that we set up. And once we have those, then from there on, you can basically start playing with all the other ones and trying to fine tune, adjust if that's what you want. Seeing if it's going to increase your risk or it's going to lower your risk, then definitely it's something to try and test out also. So let's go on the MT4 platform and see exactly how the test runs and how it actually comes out. So the account we're going to use to make a few of our points here today is the Aussie New Zealand, and this particular account is not available on our site. It's not available on the copy link, and obviously you can already now see why. This was set up almost 2 months ago, so on 9th, 11th or 12th of the December, I believe. Let's see, deposit of $10,000. And then the first one was set, okay, on the 11th of December in here. And since then it has been trading. And if we just take a quick look, we can see it started off with a range of buys. Everything seems to be okay. And then it ended up in a bit of a drawdown. came out of it again on the other side here, and then it went into a new drawdown. And as they traded sideways, it seems like it was doing quite well. And again, it went into another drawdown here, an even bigger one. So for basically 2 weeks. And when it came out of it, it actually went into another one, and now it's in a new one. And by the looks of it, it's slowly but surely coming okay again. Now, obviously, this is not too bad because it looks like it's making a bit of money. Yes, it's in a drawdown at the moment, so we are down by 1,732 as it looks right now. It's only made about $324 since it started, so obviously it's not very impressive. There's a few things we can already take from just looking at the signals here. Obviously the direction seems to be the wrong direction it takes every time, so we could simply just change that one, and then hopefully that should be okay. But we could see maybe it will take some trades up here, and then it would change again. So it's better obviously to test it. Here there's a very long one. Again, it does recover, and the interesting part that it recovers is that it recovers enough right in time before it changes again. It does the same here, and again, once again here. So obviously the grid and the settings are okay, but the direction seems to be in the wrong way. And obviously that is part of what we then test. The testing itself is going on here from 1st of March. So because a lot of interesting things was happening around 1st of March, we have used 1st of February, 1st of March as some of the starting points for most of our robots. This particular one then runs up to the 20th of January 2023. And on top of this, you can also see we're using tick data, 15-minute period, which is the standard set for the profit retriever, spread of 5. It's been optimizing, and you can see the optimization has taken 136 hours, so a really long time for this particular one. And it has gone through 1056, and it goes through every single one of them. If we have a look exactly at the optimization itself, you can see that the MA period here is from 2 to 12. We have the price gap size from 6 to 20 in this particular case. Normally we do run bigger gap sizes, but for this particular currency, we have narrowed it down. So that's the reason why. Normally we go all the way up to 60 or even 80. Depends again on the different currencies that we are using. And then we have the phase 1, so the percentage where we are reducing the lot size every single time. Lot size is here, 0.24. And the phase 1 is 95%. Target lot goes down to 0.1, so it doesn't go all the way to the bottom. And again, this is something to do with the optimization and the drawdowns itself. And then also the last part is the close rate we have here, and it closes off as soon as it goes into profit. As you could see also here, it has been working okay, down to 2. If it would have been a lot higher, it wouldn't have been able to recover. And for sure, the account would have blown if it wouldn't have closed all the way up here. So these are the details that we have and that we are starting off with. And then we see the optimizations results in here. And we can just make it slightly larger. And this is now set up for the profits itself. You can see the more than 1,600 in here. Says the profit. We can actually squeeze almost 30,000 out of this particular one with 7,407 trades. Good profit factor, expected payoff. But obviously when you start looking at some of the numbers and the drawdowns, they're quite high, 14,600. So obviously not something you can actually trade on a $10,000 account unless you are into gambling. Drawdown here is 54%. And again, you can see even before we go to our spreadsheet here, you can see the writing on the wall. So the system in here says a lot of price gaps on 6. Seems to be the top way to go. The question is now, is it also the one to go if we're going to have a look at the lower drawdowns? So what you do with all these data that you have in here, you basically right click on any given place, and then you click on copy all. That takes all the data that you have from this particular MT4 platform here, and you can now add it over to the Excel where we can have a closer look at it. So let's do that next. Now with our Excel in place, basically you copy paste it over here. So Control V, you have everything here, and these are all the data. The ones we are looking at and that we need is the MA period, the price gap, and the lot change, which is the ones that we want here. And then over here we have our profits, and also here we have our drawdowns. And what we basically want is we want to have a look to see exactly what is the profits versus the drawdowns and get a percentage out of that, because that is where we want to start everything. So we go in and do a little calculation. So the sum of the drawdown itself divided by the profit, and then it already comes up in percentage, so that's good. We'll just mark that one up all the way down here, and once that is done, we'll mark it on the corner and then add the data in here. The data will then be, where are we at? That will be I. So we set that, click it here, and now we have this particular column that it's basically set up after. And we can see that the best profit versus drawdown here will be the run 315, $11,780, drawdown of 2,295, and that is definitely one that is worth testing. And we want to have a look at a few more to see exactly where we are and what is actually possible. Now some of these that we run here is up to $6,000. It's a bit much, but having a quick look at some of the numbers in here. So what we can see is price caps of 6, which is here. So that is a major area. So that is of interest to us here. And we can see there's another one, but obviously it means that we have to change the lot size slightly. But that is the first pattern that you will find in here. And some of the things you can find is also the period table of 12 seems to be a good one here. You have 12 here, 12 here, and you also have 10, 10, and 7 and 8. So already sort of the patterns are starting to stand out of which ones seems to be doing the better job overall. And from there on, what we can then do is we can dissect it a bit more. So now we just highlighted the first ones that are we're finding high interest. We can go down and have a quick look maybe at these ones here too. So this is mostly 10s that we have in here, again with the high rates. So if we highlight them also in yellow, we can see that these are the ones that are standing out. And we're not saying we're going to use these particular testings right now, but definitely we start off with this. And then what we can do is we set it up, and we set it up for K in this particular, because this is the period that we want to set up. And we also want to have the price gap, which is then L down here. And from there on, we start looking. Now, you can see already a slight little pattern here. So things are put together. We have one that falls out of here, which is again 19,023. And this is a higher drawdown, so that's why it's not in here. But the lot change is somewhere between 60, 65, 70. And that means that, for example, this one here is worth having a closer look at. So you can highlight that one in red, said, okay, I want to test this one afterwards. If we run down here, we can see that there's another one on 12, and there's a few more on 12 here. And price cap 6, but they are quite high, so they are not really of interest to us at that particular time. And let's see what else is coming here. We have 5, but again, only one 5. We have numerous ones of others here, but again, every single one is over $10,000, so not really something we want to use. It's not very stable. We don't find many settings like this. We have another one here for 7, and all the price gaps are here. And let's see, now that one is quite okay. We can see the same drawdowns is here. So if we take a quick look, we can see that the lot change rate is 40, 45, 50, 55. So that means that one of these two here could be of interest to check. Always try and take the ones in the middle. Even down here, so for period 8, it now looks like we have even more. So we've got 1, 2, 3, 4, 5, 6, 7 we have in here. And do we have more? There's more here on 8. There's quite a few actually, together with 6. But one of the things we can see is very high drawdowns. There's only 2 that stands out here. Sorry, that was down to 8, these 2. And these 2 are again falling outside of the parameter. So for the 10,000, 60, yes, we know it's still high, but bear with me. Now the lot change size, you can see, is quite stable depending on what you have here. So the lot change rate is 40, 45, it's 5 increments we are testing. And it looks like most of them are here, 55, 60, 65. So that seems to be an extremely stable part. And what you can do is you then take somewhere in the middle of 40 and up to 70 here. So that is 15, that's 55. So basically we can try and take that one and say this one could be one of the ones to test. And then we have another one down here for period 9. And where are we at with that? It looks like this could also be a possibility, where again you highlight that in yellow and you're saying these are the things of interest. So this is 40, 45. So again, one of these 2 here is the ones that you need to focus on. And now you have some settings that you can go and test and see which ones seems to be working the best for you. So the numbers you saw just before is not the same as you see here, but basically you copy them over. We have just made these particular numbers from one of our other tests that sort of kind of emphasizes things a bit more to what exactly we want to show you here. But the whole idea is to put it in the marking. So the numbers is basically the test number that you have. So on the MT4, you have another one here. And then we have the MA gap and the phase 1 that we are checking. You can see the lot size and the other ones are staying the same, similar to our test that we had here before. And now here's the interesting part. So obviously if you have traded the Profit Retriever already, you would know that it as a continuous trading robot, it doesn't really stop. It's not like it's trading Monday, taking a nap on Tuesday and then moving on. So it's always going, as you saw on the graph that I also showed you from the trading itself. And that actually means that when you test it and start testing it at different times, for example, here we did a test starting 1st of March. If you now change that date to, for example, 1st of February or 1st of April or 1st of May, you will get different results. Obviously, the later you do, which is the smaller period of where you can actually make money, yes, that will go down. But you will see many times that the robot could crash. So you think the testing on 1st of March is great, but if you try to test the same settings on 1st of April, it will crash. And we have seen that plenty of times, and that's why we have taken it to one more level, which is, yes, a lot more technical and a lot more time consuming, as I talked about. But let's go through it quick. So we would basically set an Excel up similar to this, saying, okay, our test date was from 1st of March until 20th of January 2023. So let's just calculate that so we have that right. And then from here on, we will then have the test date, which is here. And we have that particular number that we have put in for this one. And we would have more tests down here. So please ignore the -1. I'll get back to that right now. So what we would do is we would take that particular number, we will take it back into our Profit Retriever tester, and then we will do manual testing. So going back maybe all the way to December, January, February, and then move forward, so that at least we have 5 or 6 different points in time where we can see how the robot would react. And in this particular case, it's a very stable settings that we have found for this particular one. As you can see, the profit all the way back in 1st of December when we tested 17,000, and then slowly it's declining, which is obviously what it should do because it has less and less months to make up the profit itself. At the same time, we also take a look at the drawdown. So in the beginning, it's quite high, means that was some things happening here in December and January for this particular currency, which is why we actually went that far back. And then you can see it's improving, and many times it would be that, okay, when it leaves this particular area here, we will see the next biggest drawdown. So because the biggest drawdown was somewhere around in January. And again, you will see that these 2 months on the drawdown here is exactly the same, which means again, somewhere in between this one and this one, there could be a small minute change. And then after here, the drawdown is even better. So we're trying to take the worst things out of everything, saying, okay, we have now tested this over 6 different time periods. It is making us money all the way through. And on top of this, we can also have a drawdown. And that gives us a better idea of the maximum drawdown, because you can see our testing here was 4,778. If we would have tested over here, we would have thought that that is a great setting. But if we would have traded that setting back in here, we would have gotten a big shock and basically figure out that it was more than double the drawdown. So we're trying to do this in order to find sort of stable settings. We understand that some of the drawdowns can be very high from time to time. But if we do it like this, we are a lot more confident that the testing over time, even though in different environments, because this is over a 6 months period, on top of the testing period we have from March to January. So these are the numbers, and you will obviously have more of them as you copy paste them out. So if we took, similar to the other one, we take another test, again, same gap size, and now the phase is 85% and MA is 4. We try and run the same test again. In this particular case, that test here was done in January, so that was optimized for the January one. But you can see as soon as you shift either back or forth, you can have even better results, or you can have robots basically crashing out. And then again, on the other side of whatever happened in that period of time for the currency, you will have excellent profits and extremely low drawdowns as you have here. So that again shows that this, for example, here is not a stable setting. It's not something, for example, that we would use. Now let's go to another one of the graphs. I'll show you exactly how different some of these test results can be, and that's where it's very time consuming to sit and analyze some of these things. The second part here I wanted to show you is how little it takes actually for the profit retriever to go from being extremely stable and profitable into something completely different. And that is why we are doing a lot of these tests behind the scenes. So this particular one is a bit of an older one. It's one we started off a testing from 1st of February until end of November. And again, we also tried it on different times, so all the way back to 15th of December, all the way forward to 1st of May. And in this particular case, you can see we are focused on the MA, which is the same. Forget about the blue one down here at the moment. Again, also the same setting, so for the grid sizing, the lot sizing also the same. And then here also the percentage of where we are reducing it every single time. So and then the only things that are here and we are changing is basically the target lot. So it means, okay, it goes from 0.2, for example, and down to either 0.12, 1.8 or 0.1. And at the same time here also, this is the basically when the profit retriever will close, it will close in profits. And in this particular case, again, we had a look at all the data. They indicated that the best ones was 14, 20, and 4. And when you see the minute little changes that you have in here, you have a look at the first ones that we have. You can see the first one, which is also the optimized one. It looks extremely good, 14,500, 1,600. It is absolutely perfect. But if you would have actually used those particular settings from 1st of January until or 1st of March, you would basically have crashed and burned. If you have used it at a later date, so starting 1st of February, then you would have made a bit of money again. So, and the same over here, if you would have started off in December, it would also have been good. And this has something to do with the factor here again, that the Profit Retriever continues to trade. And that obviously means that the results can change quite rapidly and quite violently, from being extremely positive, where some people can make a lot of profit and other ones with the same settings, they can't, because they started it at the different times. If we have a look at the second one here, you can also see here the is a bit more stable, so definitely it is not crashing. But look at the drawdowns you have here, and you can see you have exactly the same lines. There's only a small little difference in between. You're taking $20 instead of 14. Your target lot size is slightly lower, so 0.08. The target lot here is 0.12. And all of this comes out completely different, where you're making only half the profit as you did in December before. But you also have a higher drawdown. Here it actually manages, even though the drawdown is $10,000, it doesn't crash, but certainly very close. This is again where we tested the most positive results, so obviously it will look good here. But again, as soon as you come on the other side, you can see there's not really much profit. It doesn't crash, but the drawdown is extremely big. And these are the old files that we then had from previous testing, and obviously we test those together with the other ones. And again, you can see they're actually lying right in between here. So the target lot is 0.1 instead. And here also we take $4 in, and look at the results difference. That's all it takes. You have a nice curve basically, so where almost the profit is going slowly down, you actually have a little jump here. But you also have a lot more stable results, where you can see that there would be a drawdown somewhere here. So when you're testing back in December, the worst drawdown would be somewhere around here, 1st of February, 1st of March. And after that, it behaves very nicely. So this is what we call, this is the type of setting that we would use, because it can be used, and we can see that it is actually profitable when we set it up 5 or 6 different times during the 2022. And if we go and have a look below here, so we are basically using this setting here, and you can see the MA is the same, the PG the same. Lot size is just slightly smaller, so we're trying to test that one out. 0.24 instead of 0.3. The percentage is 70%, as we have here. And then the target lot, we go a bit lower, so down to 0.06. And then also we're taking $14 in profit. And again, just for those small little changes, you wouldn't think that it would matter too much. But all of a sudden, you can see that it becomes a bit what I would call unstable. So it's gone from basically $5,000, $10,000 up here, and goes down to almost half, even though we only lower the lot size 0.06. And you can see the next ones here. It's still good where it's optimized. That's the only good thing here. And all the other ones, it is really all over the place. This is a very good one. But when you consider all the other drawdowns that you have, you can see it's a lot more unstable. And that's why we wouldn't use this. Then we would rather stay on the 0.3 lot and trade that one out. Now, I hope I didn't confuse you too much with all these different numbers and all the different graphs in here. So the whole idea of this particular video is show you the nature of the Profit Retriever. Obviously, yes, it makes profit no matter what. And I know that Alex and Expert Forex is saying that, and we also find that it really works quite well. But we have seen once in a while that even when we have done all this testing you have just seen, we still had an account once in a while crash, and we could hardly find a way of how to reproducing it. We were just very unlucky that it timed off with the currency trending and then the pair going against it, and that's basically blew the account. But this, of course, is our way of trying to test them and trying to test the most stable results that we can see. Because even as you saw now here, also minute changes within the robot changes a lot of the profits, changes a lot of the drawdowns. And that's why we prefer not to do this on the fly, because as we have been testing all these things in the background, we can see how much it actually means. So we are very cautious of making big changes. And if we make changes, then that is the process that we normally go through. And as you can see, it is extremely time consuming to make sure that you find the good and right stable settings. Once you have, and once you are getting very close to something you can actually use, then try and stick with them. So unless something happens on the robot itself, then don't fix anything which is not broken. Now I hope you enjoyed this video, and this was a bit more on the technical side than what we normally like, because yes, we like to give an insight on what is actually happening, but it can also get a bit too technical sometimes. For the people that enjoyed this and actually understood exactly what I'm talking about here, I would love to hear back from you on how you see this. If you have found the same issues with the Profit Retriever as we have. As I said, it doesn't make us stop at all. We have known about this for a very long time, and that's why we are setting it up. That's also why you most probably won't see that we are not lying, most of our EAs, we are not lying in the top 5 on the CopyLink service, because we're trying to get the stability into it. Yes, we know that even all the things that we are doing here and now, we will still blow an account, and we also calculate for that with our profits, that this will most probably happen somewhere around every 3 or 4 months, no matter what we try and do and set up. And this will just be the market forces, and it will be the robot that is not always pointing in the right direction when big things are happening. And that is something you have to take into consideration when you are trading any type of robot, any type of trading. So things can go wrong once in a while. You just have to put a few things, measurements in there. And that could again be traded in a portfolio, trade a lot of different currencies, trade gold, metal, indexes, things like this, in order to spread the risk, because not all of them will be trending at the same time. I hope you enjoyed this. Please give us a thumbs up, and look forward to your comment and remarks. Thank you for today, and bye-bye.